Hello everyone, welcome back to the channel. It is September 2021. We made it through another 30 days and had a couple eventful things happen this month, but nothing too crazy. Didn't buy any houses, didn't hit the lottery or anything, but for gross income, I did make one paycheck that was $1,200 more than my standard amount. So I made $8,000, almost $200 this month. Paid $1,600-ish in taxes, $1,600 in the 401k, put almost $350 in the employee stock purchase plan, and then took home almost an extra $1,000 this month. So $4,636. Then for my wife, she's back up to $5,000. Put $471 in taxes, 2,625 in her 403bs and 457bs. Then HSA was the same, 387, $130 in insurance, and then $1,300 in take-home pay. And then the exact same rent this month, so $2,296. So again, the one lady just paying a little bit late, like 5-6 days late each month. So nothing too crazy there, but she's always lets me know what is going on. So and then we had some other income this month as well. So my wife's grandmother passed away in July, and she willed all the kids about $4,000 apiece. 2,000 of that came in July, and then 2,000 of that came in September. So that is finished. So that's that other $2,000 in income this month. Gross income 17,000. Take home pay was $8,013. Other than that, we're almost to $1 million of total gross pay in our lifetime. So probably October or November, probably November, we'll cross the $1 million mark here for total gross income. But jumping into net worth, no changes in houses. They just went up there 2%. No changes in vehicles either. Stock market this month was interesting. So stock market went way down this month, probably 5% roughly. So I did use that opportunity. I put another $10,000 into M1 Finance from my personal account. And so we finally crossed the 6-digit number, so 101,000. So really this 93 went down to 91, and then I put 10,000 in there. So that's where it's at right now. It's kind of nice. So the dividend portfolio, which I'll show you here, it's basically these stocks is what that $100,000 is made up of. It's averaging about a 3.8% dividend yield, which is actually pretty nice. So some months we're making maybe $400, maybe $500. Other months we'll make like $90, $100. It seems like September, December, March, and June or July are the 4 months that we get a whole lot more dividends than the other. And so the way M1 Finance works, as soon as we make dividends, it just reinvests it back into the portfolio. So, but it's still kind of cool. Every month it seems like, or every month, almost every day we have some kind of dividend that's paying out, or at least one dividend pays out every single week. So it's kind of cool to see. Just a lot of income coming in. A lot of them are like let's say Visa. It's like we'll get a dividend of like $1.50. But then from AT&T, we'll get a dividend of like $50. So it's still kind of cool. It's definitely not as good as the rental properties, but just kind of cool to see weekly money coming in every month. So since the market was down this month, basically every single other account is also down, even though we contributed money to them. So just again, another month that we're buying in lower. So HSA went down a little over $1,000. My 401k went down about over $5,000. My employee stock purchase plan actually went up $400. Speaking of this account, so this is all in my employer stock. At this point, I feel like we are overvalued to some extent. So COVID seems to be, wrapping up a little bit. It's definitely still out there, but the scariness of it is kind of wearing off. I feel like we're still manufacturing tons and tons of COVID vaccine. But at this point, like I know how the pharmaceutical industry works, and when Ebola or swine flu or COVID-19 comes, pharma ramps up and speculation, happens, and I feel like, we went from probably $40 a share up to like $120 a share right now. So we've tripled our share price in about 2 years. So it's been great that I'm in this employee stock purchase plan. Our PE ratio right now is like 80, 82. And so, I don't feel like it's realistic to continue the growth, especially, if when COVID goes away, which it's starting to a little bit now, we're going to lose a lot of the revenue. I'm assuming, unless they make COVID-19 vaccines forever. But we'll lose a lot of the revenue that we're generating right now. So over the next few months, I'm going to see how this does. Maybe wait till the next quarterly earnings report. I will get more shares vested in January 15th, 2022. And so probably when I get those shares, I will cash out of this. I was very optimistic about the company when our PE ratio was like 20 or 25, but now that we've tripled our share price in 2 years and we've not tripled our revenue, things just don't quite add up. And I think the market has factored in that we're just going to continue growing at like unprecedented rates, which I'm not that optimistic, I guess. I'm more of a, I guess, a pessimistic viewpoint on that. But so we'll see. We'll see how this does over the next few months. We'll see what the stock, if it keeps moving up, we'll see what our quarterly earnings report is in December, and then you'll probably see me start to cash out a little bit on the employee stock purchase plan. So my wife's 403b actually went up. It was more flat this month, maybe down 1%, but since she's putting in $2,600 a month, she can kind of still show positive. So up $900 for her. So overall, ignoring the $10,000, it looks like we were down $6,000 this month overall, which 6,000 out of 425,000 is not too bad. But with the $10,000 addition, we're still up $4,000. So that, believe it or not, that is the worst month I think I've had since at least September a year ago. Which is good. So market's been doing really well over the past 12 months, which, yeah, I mean, going from 188 to 425, proof is in the pudding, I guess. Debts, made the minimum payments, as I always do, never late or anything like that. And it looks like we owe 415,296. Yeah, under 90,000 on house number 5 we were last month, and then house number 7 we're at 93,500. I don't plan on making any changes with these. If they were 5 or 6% interest rates, I would probably focus on them a little bit more. But the fact that they're all 3 to 4%, yeah, I'm really not going to mess with it too much. The only thing that is on my radar is house number 5 here. So this was the first rental property that I purchased back in 2019 or something like that, 2018, 2019. So I put 15% down when I purchased this house, so I'm still paying PMI. It's really not much, like $20 to $40 a month, I think. So it's not anything that I'm super concerned about. But with mortgage rates dropping, and this one's at 4.25%, I think. Um, so with mortgage rates dropping, I may refinance this house and just do it on 30-year fixed rate again, but lower my interest rate. And at this point, to refinance and lose PMI, I need to be at least 80% debt to equity ratio. So if the house was worth 200,000, then I would need to have a $160,000 loan or less, and to not pay PMI. And so my plan is I'll probably refinance this over the next couple months, and I'm not going to do a cash out refinance, just um, strictly a term refinance. So reset my 30 years, have them do an appraisal on the house, get rid of my PMI, and then lower my interest rate. And then I'll have to pay a little bit of closing costs for that, but it would probably be worth it to lose that $40 and then lock in like a 3% interest rate. So I'll probably do that over the next like couple months and see. I'll start calling all the banks and see who has the best rate. So I'll usually call maybe 40 or 50 different banks and just have a quick conversation, see what their interest rates are at, see what the point buy downs are, 15-year, 30-year fixed. I really don't do any like 5-year ARMs or 10-year ARMs or variable rates or anything. I'm trying to just lock in super low interest rate 30-year fixed rate loans. So yeah, maybe some changes coming with house number 5 over the next couple months, but we will see there. Checkings account went down $4,000, so really overall not bad since I put $10,000 in M1 Finance. So really I'd be at 62,000. So I would have saved $6,000 this month, and then again 2,000 coming from my wife's grandmother. So total cash 64,000. Net worth only went up about not even $1,000 this month. So pretty much a flat month. in terms of net worth. And I should have updated my goal pace here, but bear with me. I'll do that real quick. So we are on September 2021. So I should actually be at 555,000, but I'm actually at 825,000. I'm just going to round here. So it looks like I went down 14,000. I should be saving about $14,000 a month. So since I was basically flat this month, it's probably actually 800 here. So it looks like I'm $270,000 ahead of my goal pace of becoming a millionaire by the age of 30. But just kind of looking ahead here, so I should be at 750. I'm way 825. So I'm actually on the end of May 2023 is where my net worth is right now. And so I should be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm exactly 1 year away based on my estimates of becoming a millionaire. So we'll see. We'll see if I can beat it over the next 12 months. But yeah, I'm way ahead of pace right now, which is great. But based on my calculations, I should be about 12 months away if I'm hitting $14,000 a month saved. So most of the months we are. It seems like we're at 200,000 to 250,000 a year is what we're adding to our net worth right now. I guess here is September of last year. So last year we were at 590,000. Now we're at 825,000. So that is 235,000. So yeah, almost $20,000 a month is what we've been averaging over the past year. So we should, yeah. I mean, I think it's pretty realistic over the next 12 months. We should be at that. I mean, for sure at that $1 million mark. So that's great to see. So yeah, $270,000 ahead of our goal pace. We did lose a little bit this month, but mainly due to the stock market going down. Again, I don't really freak out about stuff like that. I probably had 10 or 12 months now where our investments have went down. I've literally not changed anything. I just keep the exact same contribution rate that I have in my 401ks and my wife's retirement accounts that she has. So just another opportunity to buy in lower. I'm sure next month it'll probably go right back up, just like it always has. But even if it stays down, I'll just, I may even put more of our checkings account into M1 Finance. So if it dropped 5%, I would probably get rid of 30,000 and add that 30,000 into M1 Finance. But yeah, depending what it does, if it stays pretty flat, I'm probably going to hover somewhere around this $50,000 mark. That's kind of our, I guess, security blanket. We probably spend $4,000 a month, I would say, maybe $5,000 a month to keep our household afloat. So 50,000 is like a year's worth of safety net or emergency fund for us. And so yeah, the $50,000 mark, we can still sleep at night. If we had an emergency like furnaces go out, roof issues, air conditioning issues, we've got plenty of cash to stomach those things. So unless the market goes way down, I'll probably stick somewhere around this $50,000 mark. So yep, I think I've rambled on enough here. So net worth at the end of September is $825,789 and about $270,000 ahead of our goal pace of becoming a millionaire by the age of 30. So have about 2.5 years left before we're 30. So I'm pretty sure we're going to hit it unless the market absolutely collapses. But yeah, we'll see. I'll keep pushing hard, keep working as hard as I can. Trying to find opportunities in real estate. Just not very many have come up here recently. One thing I did not comment on. I'm actually going to go back. I'll stay here, but on house number 6, we had an accepted offer for 55,000, which was our list price. We bought the house for 20,000 maybe a year and a half ago. The person put $1,000 of earnest money down on the house and then backed out of buying the house. And so I think they did maybe some inspections and realized it was too much work for them. So we actually get to keep their $1,000 earnest money, which I'm super thrilled about. But we will need to find another buyer for the house. We've had maybe 7 or 8 different people come by and look at the house, and we should be getting some offers coming in here in the next couple days. But Yeah, so not super concerned about that. Honestly, if people could just keep sending me offers and I could keep making the earnest money, make it kind of like a rental property that's just always up for sale. But I'm sure somebody will come around here in the next couple months and give a decent offer. So anything above 50,000 will probably take that. But just a last little side note there. So thank you all for watching the video. Be sure to like, comment, subscribe. Next month's videos are on the screen now. And as always, if you have any questions, comments, things that you'd like to see in future videos, just comment them down below. Thanks everybody, and we'll see you in the next video.